Hello traders, welcome back to another video. So on today's video we're focusing on order flow, and you might be asking yourself, what is order flow? Order flow is the sum of all buy and sell orders in a market, and it is used to analyze market sentiment and predict price movements, guys. Now, and for those who don't understand, I'll make sure that I drop an example before the end of this video here, guys. Now, so moving over to the next page, how does order flow work? Order flow shows where and how traders are placing orders. So which means you're going to be using your supply and demand using the order flow that we talked about on the first page, guys. Now, and it also helps you identify large and small market participant based on trade volume, guys. Now, for those who don't know volume, we just need that impulsive move or those big candles to show that the market is moving in a specific direction. Now, it can help you detect early trends, whereby you can just anticipate if the market will just give you a change of character or continue pushing in the particular direction that you are trading, guys. Now, it can either be a sell or a buy. It will be continuing with that trend. It can help identify areas of significant long or short interest, guys. Now, so it can help you like do a lot of things like we talked about like on previous videos, like change of character, your market structure shifts. That is how order flow works, and then it will help you in each and every setup that you are taking. That is if you're using it wisely. That is why I'm saying that I'm gonna show you an example before the end of this video here. And moving over to the last part, we have a diagram here, and as you can see here, we have the outer structure pushing to the upside. As you can see from this point here, we had this low, and then we had, let me just use a marker. So we had this low here, then we had this high, then we have your higher low, then you have a higher high here, of which it means that we have a break of structure around this point. Then after having this break of structure, guys, we are going to have the internal order flow in this market here. So let me just draw it out. So as you can see here, we had this high here, and after having that high, we have this low here. So whenever we have this break of structure here internally, just because we know that this high and this low here is your overall trading range, so we're going to have like an internal change of character, which means the order flow will be changing for a bit, whereby on the lower time frame it will be giving you like a reversal or a corrective move to the downside. So after the change of character here, we have this low, then we have a lower high here, and then we have a lower low. So this is a break of structure followed by this lower high within this point. Then we have a new lower low, lower high, lower low here. So you can see that the order flow is pushing to the downside. So far the sentiment is to the downside. We are only looking for selling opportunities. That is if you are trading counter trend trades, guys. Now, so that is how you need to map out like your overall market structure. And then going back to the order flow changes of character, or to show you like the market will be changing like direction soon, using this order flow example, will be having this low here, lower high, then we're having a lower low here. Then after we have a market structure shift, of which that is the change of character that we always talk about. So we have your change of character here, then the order flow will be realigning with the overall outer structure here, or the pro trend, guys. Just because the pro trend is to the upside, the market is creating higher highs and higher lows. So this market structure shift or this order flow shift will be in line with the overall market structure or the overall higher time frame market structure, guys. Now, so let me just show you on the live charts. So guys, for this particular example, I'll be using USDJPY, and we can start off on the 4-hour time frame. And as you can see on the 4-hour time frame, we had the market pushing to the upside, creating those higher highs and higher lows within this point here. And we had a change of character. As you can see from this point, we had a break of structure here, break of structure within this point. It shows that the market is moving to the upside, and then the internal flow, order flow, came up within this area here. Then we had that short-term sell into an area of demand around this point. Then the market started pushing up, and knowing that we have a protected low within this area here, whenever the market takes it out, it means that we have your change of character. Now the market will be pushing to the downside, guys. Now, so that is how you can map out like your overall market structure right there. But like we are getting into the order flow part, just because you want to see that order flow, guys. Now, so as you can see here, this is the break of structure, and after having the break of structure, obviously you need to use your Fibonacci tool from the high to the low just like that. And then as you can see here, we had a fair value gap or an imbalance, guys, now depending on how you want to name it. So this is the imbalance and it must be filled, obviously. And then we had this area of supply at the top of the structure just like that. So after having these things here, we look at the lower time frame, guys, now. So looking at the lower time frame, that is where you're going to understand like the order flow that we were talking about in the beginning of this video here. So as you can see here, we pushed to the downside nicely, and then the order flow came up within this point here. As you can see here, we had this low, lower high, then we had this lower low within this point here, lower high, and then we had equal highs within this point, then we had a higher high, higher low. And let's just continue with the overall order flow here. As you can see here, the order flow was pushing to the downside using the overall pro trend that we had was like selling, guys, now. So after pushing to the upside, we need the market to tap into this area here. That is when you're going to use the order flow to get a realignment or a market structure shift to show you that the market is no longer pushing to the upside, but like realigning with the higher time frame market structure, guys, now. So as you can see here, we had that shift, but like this was not a valid shift. This because we didn't get like a body break here. We only had a weak creation, of which this is a liquidity sweep. Né? This is a liquidity sweep. Then after having that liquidity sweep, that is when we have your change of character here. And that change of character is also a market structure shift for those who use like different terms when coming to trading SMC, guys. Né? I just keep it simple. So as you can see here, we pushed to the downside, knowing that our highest point, it's this one here. We had this high, then we had this low here, which means that is your overall trading range. From this high to this low here, you have your overall trading range, and that is where you're going to take your selling opportunities, just because the higher time frame was pushing to the downside. As you can obviously see here, the market was creating lower lows and lower highs. So whenever the market is giving you those selling opportunities or the selling pressure, it has to come back internally, and then whenever it reaches a POI or a point of interest, like I said on my presentation, you need a realignment on the lower time frame, of which it's the 15, depending on how you trade, or the 5-minute time frame. It doesn't matter. So as you can see here, we get that realignment on the lower time frame, the 15-minute. Then we have your high, then you have your low using the 3-candle pullback. As you can see here, we have the first one, second one, and then the third one here, and this one in the middle doesn't matter as long as they are in one movement, guys. Now, so this is one movement. As you can see here, this is one movement, and the first one is this one, the second one is this one, the third one is that one there, guys. Now, so that is why it's a confirmed pullback, and then we can just use your fib tool from the high, just because you're looking for selling opportunities, to the low, just like that. Then as you can see, the market went straight into the 50% mark, and at that 50% mark, you can obviously see that we had a fair value gap, guys. Now, so let me just remove that. So this is an imbalance, and then whenever you get like supply areas or demand areas with like an imbalance, maybe at the bottom or at the top, depending on the structure that you're trading, just know that it will work out very nicely, guys. Now, so as you can see here, that's the fair value gap, and that is the supply area that we have at the top of the structure, just like that. And you can just take your entry just below here, just below this point, and your stop loss can be just above this area, or it can be just above that point there. But like, you just need to be safe so that you can give like the trade some breathing room, so that even if you are in a drawdown trade, you can just withstand it up until it goes in your direction. As you can see here, we have like a 17% trade setup. Simple as that, by just using your overall order flow. And we can just look at like other examples. Let me just do this. Let me just go back into this price action here. So we can just switch back to the 4-hour time frame, just because we need like higher time frame bias or higher time frame structure before we can get to like give you like a valid example. So as you can see here, we had a break of structure. Then after having the break of structure, obviously, let me just try and remove everything so that you don't get confused. So we have a break of structure here. So we know that this is our high and this is our lowest point right there. Né? So we can just use the fib tool from the high to the low, just like this. Then we have an area of interest. and that area of interest is this one here, just like that. And then we can move over to the lower time frame, and then we can just box out like our overall structure so that we can know what we are trading. So just like that, let me just draw this as like a supply zone so that it can make like a bit more sense on the lower time frame. So the 15-minute is like the entry time frame that I use whenever I'm on the 4-hour. So here we have the structure, and as you can see here, the market tapped into this area here, but like before tapping into this area here, we had the order flow. As you can see, the market was giving us a low, high, low, high. Sorry about that, guys. Now, so we had a high here, then we had a low, then we had like some type of a liquidity sweep around this point. Yeah, it's just a liquidity sweep, it was not a break. And then after that, the market pushed to the upside, gave us a high, then a low, then a high, then we had a lower low here, of which that is the realignment that I'm always talking about, like on the lower time frame. Yeah? And whenever we have like this area here, this is a liquidity sweep, obviously. As you can see, that was not a break. Then this was the realignment to show that the market is no longer pushing to the upside just because we came in an order flow whereby the market was pushing up. So this is the realignment or the change of character. And then the lowest point here, it's this one here. Obviously, you already know what I'm talking about, guys. Now we have a 1, 2, 3 candles. It means that this is your low, then this is your high within this point. So now you just need your Fibonacci tool from the high to the low, just like that. Then you can already see your area of interest so that you can take your selling opportunities. So just like that, you place your supply zone right there, your supply zone. Then you can place your entry just like this. Let's say maybe your stop loss is just above, but like whenever you want to be protected or stay like in trades for longer, you just need to use like the previous high, just like this one here, as you can see here. And the rest to reward will be like will be decent, guys. Nah? It will be decent, to be honest. Unlike losing like a stop loss or by a 2 pip stop or a 1 pip stop, it's not gonna work. So using like a 300 or a 30 pip stop in this case, it's okay, guys. Nah? But like you can obviously see that there is like something that you're going to get like 5.81%. That's still okay. Nah? And we had like a push to the upside, and that is like the order flow trading that you need to understand. And I hope you got to learn like something from this video here, and I'll see you on another one, guys.